Welcome to the deep dive. Today, we're taking a plunge into an industry that, well, it touches almost all of us, often without us even realizing it. We're talking about the global call center services market. Our mission really is to unpack how this huge, crucial industry is changing across the globe. We'll be looking at its growth from 2021 right through to 2033. We're using insights from some pretty solid market research. Think of it as, your fast track to understanding where global customer service is really going. And it's all backed by real data. We've got some surprising facts lined up too. Okay, so let's dive right in. First up, the big picture. The global call center services market, it's just undeniably growing. Back in 2021, it pulled in a staggering $350 billion in revenue. But it doesn't stop there, not at all. Projections show it climbing to about $480 billion by 2025. And then a really big leap to nearly $595 billion by 2033. That works out to a consistent global compound annual growth rate, CAGR, of about 4.5%. So on average, expanding that much each year.
Yeah, and what's truly compelling about those figures, it's not just the huge scale, though that's impressive enough. It's that consistent growth rate, that 4.5%. I mean, hitting almost $600 billion. It really points to customer service shifting from, just a cost center to something absolutely critical for business strategy, pretty much across every sector globally. It suggests a fundamental change in how companies see and invest in customer interactions. It kind of reinforces that, human connection. It's still incredibly vital, even with all the tech advancements we're seeing.
Right, absolutely. So we've got that overall momentum clear. Now let's zoom in a bit on the regional stories. Let's start with North America. It's still a really dominant force in this space. This region alone, it's expected to grow from roughly $100 billion back in 2021 to over $160 billion by 2033. That's an annual growth rate of about 4%, solid growth. And within North America, no surprise, the United States is, it's a giant. Revenues there are projected to climb from around $80.7 billion in 2021 to almost $126 billion by 2033. But here's something interesting. While the U.S. market is massive, Canada is actually growing noticeably faster. Its market is set to expand from about $15 billion in 2021 to over $29 billion by 2033. That's growing it at an impressive 5.5% annually, quite a bit higher. And Mexico contributes significantly too, figures there are rising to over $5.6 billion by 2033.
That contrast, between the U.S. and Canada's growth, it's definitely striking, isn't it? The U.S. obviously holds the largest market share in absolute terms, no question. But Canada's faster growth rate, nearly 2 percentage points higher, like you said, it really makes you wonder about the specific drivers there. Could it be perhaps a surge in specialized BPO services? Or maybe Canada's becoming even more attractive for new call center investments. Things like it's a diverse talent pool, maybe strong multilingual skills playing a part, or even specific economic incentives. It kind of prompts you to look beyond just the overall size and consider the distinct nuances within each market.
Exactly. So we've looked at North America's dominance in that interesting Canada story. But okay, what about across the Atlantic, Europe? What story do the numbers tell there? Well, this market started around $85 billion in 2021, and it's on track to hit about $135 billion by 2033. So that reflects a pretty solid annual growth rate too, nearly 4%. But what's interesting here, again, is the variety within Europe. You see different paces. So the UK and Germany, they're still major players, obviously. But countries like Italy, Russia, and Spain, they're projected to grow even faster. Their CAGRs are pushing close to 5%. For instance, Italy's expected to reach almost $15 billion by 2033. Russia is looking at close to $14.5 billion, and Spain over $11 billion. And then you have other key European markets by 2033, like Sweden over $8 billion, Switzerland hitting over $9 billion, and France climbing to more than $20 billion.
Mm-hmm. And looking closely at those European figures, that steady, yet, like you said, varied growth, it's quite telling. You see countries like Italy, Russia, Spain showing those notably higher growth rates, getting close to 5% a year. It suggests a really dynamic environment there. It kind of implies that these national economies might be, more aggressively adopting or expanding their call center services. Maybe it's to cater to growing domestic demand, or perhaps they're trying to position themselves as, new outsourcing hubs. Either way, this commitment to boosting customer service infrastructure is a pretty significant factor for the future health of their service sectors.
Totally. So if Europe is showing varied but steady growth, where is the really high growth happening? That takes us to Asia Pacific. This region truly stands out. It's expanding from almost $120 billion in 2021 to over $146 billion by 2025, and then really surging, to an incredible $217 billion roughly by 2033. That comes with a very strong CAGR, over 5%. So definitely a high growth zone. Now, looking at the drivers within APAC, China alone expected projected to grow from about $40 billion to nearly $70 billion by 2033. Huge numbers. Japan's following closely behind that, set to hit almost $35 billion. But the real star here, you could argue, is India. It has the highest CGR in the entire region. We're talking close to 6.9%. It's projected to grow from just under, $18.7 billion in 2021 to a massive $41.4 billion by 2033. Really significant. And we also see strong expansions elsewhere. South Korea reaching over $19.5 billion. Australia, nearly $16.5 billion. Singapore, over $9 billion by 2033.
Yeah, and if we connect that APAC story, especially India, to the bigger picture, its rapid expansion signals a significant rebalancing in global business. And in outsourcing trends too. India, as you know, has long been a powerhouse in outsourcing. And this continued, even accelerated growth. It just underscores its enduring appeal. Factors like its large English-speaking workforce, competitive costs, they're still key. So it suggests that as global businesses keep expanding and looking for, efficient customer service solutions, a larger chunk of that demand is being met by providers in the Asia-Pacific region, particularly India. This is definitely going to influence how multinational corporations structure their customer operations over the next decade. No doubt about it.
Fascinating. Okay, let's move now to some of the other key emerging markets. South America, for instance, also showing really robust growth, climbing from about $24 billion in 2021 to nearly $45 billion by 2033. That's a strong annual growth rate, too, over 5.2%. Brazil's leading the charge there, growing to almost $20 billion by 2033. But look at Argentina and Colombia, both showing remarkable momentum, nearly 5.9% CGRs each, reaching over $9 billion and $6.4 billion, respectively. Very dynamic. Then there's the Middle East, another growing market. It's climbing from about $11.5 billion in 2021 to over $22 billion by 2033. And that comes with an impressive TGR of about 5.5%. The UAE specifically stands out here. Highest TGR in the region, actually, over 6.6%. It's set to reach nearly $3.9 billion by 2033. And lastly, let's touch on Africa, growing steadily from around $9.8 billion in 2021 to over $15.4 billion by 2033. Nigeria leads this region, reaching nearly $6.8 billion, while South Africa will hit over $6.2 billion.
So what does all this mean? The so what for these emerging markets? Well, those high CAGRs we're seeing, especially in South America, countries like Argentina, Colombia, and in the Middle East, particularly the UAE, they're highly significant. They really indicate rapid investment, rapid expansion, and service delivery capabilities within these regions. For businesses, this translates into new opportunities for market entry, for outsourcing. And for consumers in those regions, it likely points towards better, enhanced local service infrastructure. These shifts could really start to redefine the global service delivery map, offering more diverse, more competitive options beyond just the traditional hubs we think of.
Wow, what an illuminating deep dive this has been. We've really seen the truly global nature of the call center services industry. Wow. It's clearly on a dynamic, undeniable upward path. And the growth patterns are just fascinatingly diverse across every region, from that rapid expansion we saw in Asia and South America to the steady, still very robust growth in North America and Europe. Understanding these trends, it feels incredibly valuable for anyone looking at the future of business or just customer interaction generally.
Absolutely. And it really leads us to consider, doesn't it, what might all this continuous growth and these varying regional dynamics, what might it all mean for the future of customer interaction itself, for employment landscapes globally, and, for how technology keeps integrating into our daily lives?
That's definitely a powerful thought to mull over. What aspects of this deep dive stood out most to you? And how might this knowledge apply to your own view of global business and service? We'll catch you on the next deep dive.
Think about your average week. How often do you actually interact with a company's customer service? Maybe you're tracking a package, or getting help with your banking app, or even troubleshooting that really stubborn Wi-Fi connection. We tap, we type, we call, and often we don't even consider the massive, pretty intricate industry that's silently orchestrating all those connections behind the scenes. So today, we're peeling back the layers on exactly that. The dynamic, constantly evolving world of the global call center services market. And look, this isn't just about answering phones anymore. Not at all. We're going to uncover the core forces pushing its, frankly, staggering growth. We'll also dissect the very real hurdles it's battling and maybe peer into the cutting-edge trends that are completely reshaping its future. Our deep dive today is based on some really comprehensive analysis from industry experts. We're drawing insights specifically from global call center services, drivers, challenges, and future trends by cognitive market research. So our mission for you is pretty simple. We want to extract the most important bits of knowledge so you can be instantly well-informed.
hopefully with some genuinely surprising facts and a truly practical understanding of this vital global sector. Okay, so before we even get into the the nitty-gritty of what's driving this market forward, let's maybe talk about why this sector is so incredibly important in the first place. Why are call centers as an industry just so indispensable today?
Right. It's easy to think of them as maybe just a necessary evil, something you have to deal with. But cognitive market research actually frames them as the absolute linchpin of modern customer service. The core, really. This isn't just about managing calls anymore. It's about being the front line. It's where brand loyalty is often won or lost. They're indispensable because they absorb the sheer scale of inquiries. I mean, often millions a day for large companies that no other department could possibly handle. It prevents systemic breakdowns, and it directly influences whether you, the customer, come back. They really are the backbone that keeps those customer relationships from unraveling.
That makes perfect sense. Yeah, handling the sheer volume and, I guess, the complexity, too. And speaking of volume, this market isn't just humming along. It seems to be propelled by some incredibly powerful forces. What's the first major driver you saw really emerge from the research?
Well, I think the most immediate one is just the surging demand from B2C industries, business to consumer. What kind of surprised me reading through the cognitive market research analysis was just how dramatically B2C demand is reshaping things. We're not just talking about more calls. They highlight how, for instance, the average customer interaction in e-commerce has jumped in complexity by nearly 40% in just the last 2 years. That's huge. And that's pushing this desperate need for truly 24/7, multilingual, really intelligent support because, customers now expect instant solutions, no matter the time zone or the language.
Right, instant gratification based.
Just too much, yeah.
That surge in demand makes total sense, but it also highlights why so many companies seem to be leaning so heavily on another powerful force, outsourcing. Is it really just a race to the bottom for the cheapest labor, or are companies discovering maybe more strategic advantages beyond just cutting costs?
That's a really critical question, and the research shows it's far more nuanced than just cost. While cost reduction is certainly a primary driver, especially for big global companies, businesses are increasingly leveraging outsourcing for its incredible scalability. Think about it, a sudden product launch or maybe a seasonal spike in demand. Outsourced centers can ramp up or down their workforce really rapidly. Plus, they provide instant access to specialized, already trained personnel and advanced infrastructure, all without that massive capital investment of building it all in-house.
So it's like flexibility on demand.
Exactly. It's why places like India and the Philippines aren't just, call centers in the old sense. They're massive hubs with highly skilled, often English-speaking workforces, and yes, a compelling cost advantage that's extremely appealing to global brands.
Okay, and then there's the cloud. The cloud revolution, it feels like it's transforming absolutely everything these days. We're seeing this rapid shift towards cloud-based call center solutions. What exactly does that unlock for businesses and, I suppose, for us as customers?
Oh, cloud solutions are fundamentally changing the game. They offer just unmatched flexibility. Agents can work from almost anywhere, and you get real-time accessibility to data, all without that heavy, expensive on-premise hardware of the traditional setups. But what's truly transformative, I think, is how seamlessly these cloud solutions integrate with CRM systems, customer relationship management, and advanced analytics.
Right, the CRM integration. How does that play out in practice?
Well, think about it. An agent isn't just taking your call blind. They can instantly see your entire interaction history, your previous purchases, maybe your website visits, even that chat you had last week with a different agent.
Ah, okay. So they know who you are.
Exactly. That data-informed customer experience means they can be proactive. They might say, I see you were looking at product X online. Are you calling about that? I know. It makes the whole interaction far more efficient and, frankly, more personalized for you. And, of course, this transition heavily facilitated the rise of virtual call centers, a trend that really got turbocharged by the pandemic and the whole shift to remote work. What's really fascinating here is how these drivers, the demand, the outsourcing, the cloud, they aren't just about operational efficiency for the company. They're fundamentally reshaping how businesses connect with you, the customer, building a more proactive, more informed relationship.
It sounds like this relentless wave of growth and innovation, but, as with any booming industry, there got to be significant counterforces at play. Roadblocks. So what does this all mean for the challenges? What are the biggest headwinds these companies are battling, and how do they impact the services we actually rely on?
Absolutely. It's not all smooth sailing. The top challenge unsurprisingly, perhaps, involves substantial data privacy and security concerns. Call centers handle incredibly sensitive customer information, financial details, health records, personal identifiers, and that responsibility just comes with incredibly high stakes. You've got strict global regulations like Europe's GDPR or the US's IPEO. These mandate service providers adopt robust, often very expensive, security protocols. This adds significant complexity and cost to their daily operations, and of course, it dramatically increases their liability if there's a breach. It's a constant high-wire act.
A huge responsibility. And then there's that ongoing battle with high agent turnover. I mean, we've probably all experienced that on the customer end, right? Where you can just feel the agent's exhaustion or you get handed off multiple times. How profoundly does that actually impact the customer experience beyond just being an internal cost to the company?
You've hit on a really critical point there. It's not just an internal HR problem. It directly erodes customer trust and consistency. The research points to the repetitive nature of the work, combined with high stress levels and often limited career growth opportunities. These frequently lead to burnout. Some studies indicate annual turnover rates as high as 40, even 50% in certain segments.
And 50%.
Yeah, it can be that high. And this high churn translates directly into increased training and recruitment costs for companies, obviously. And perhaps most importantly for us, it impacts the consistency and the overall quality of the customer service you receive. Imagine calling 5 times about the same complex issue, and each time you get a brand new agent who has zero context. It's incredibly frustrating.
Totally. And specifically for the offshore centers, beyond those operational challenges, you mentioned language and cultural obstacles can sometimes pop up too.
Yes, that remains a persistent challenge, even with, excellent language proficiency on paper. Subtle misunderstandings due to cultural nuances or accents can definitely negatively affect the customer experience. Little things can get lost in translation. This challenge is actually prompting some businesses to rethink their global support strategies. Sometimes it leads them to consider nearshoring, basically, setting up operations in a neighboring country, one with closer cultural and time zone proximity.
Like a U.S. company outsourcing to Mexico or Canada instead of, say, the Philippines.
Exactly. Rather than going completely offshore to Asia, for example. The aim is to bring operations closer to their main customer base, while still potentially offering some cost benefits and achieving better cultural alignment. This all raises a really important question. How do companies effectively balance that constant drive for efficiency and cost savings with the absolutely critical need for quality, for trust, and also for employee well-being? It's not an easy tightrope to walk.
That's a truly fundamental question, isn't it? Finding that balance. So, okay, looking ahead now, looking towards the horizon, what are the key trends that are transforming this industry right now? What can we expect to see even more of in the near future?
Well, the first major trend, and probably the one impacting us most directly as customers, is the widespread integration of AI and chatbots. These smart systems are truly revolutionizing the traditional call center model. They're handling a lot of the routine, simple queries. This dramatically improves what they call first contact resolution rates, meaning your simple question gets answered instantly, maybe by a bot. And crucially, it frees up the human agents to tackle the more complex, more nuanced issues that really require empathy and problem solving.
So AI handles the easy stuff, humans handle the hard stuff.
Pretty much. AI-powered solutions don't just drive efficiency, they also significantly reduce call handling times, and they improve the overall user experience by offering, round-the-clock availability for common problems.
Right. And beyond just managing more channels like chat and email, there's this big push for omnichannel support. That word comes up a lot. What does that really mean for how a customer experiences a brand, and how challenging is it for companies to actually deliver that seamless experience?
That's kind of the holy grail, isn't it? Omnichannel. It's not just about offering voice, email, and chat separately. It's about tracking your entire customer journey across all those touch points. So if you start a conversation on web chat, then maybe switch to email and then finally call. The agent who picks up the phone immediately knows who you are and what you've already discussed. No repeating yourself.
The dream.
Exactly. Call centers are rapidly evolving into these omnichannel hubs that can track a customer's journey across all these different points. The goal is ensuring you receive truly seamless and personalized support, no matter which platform you choose to engage on at any given moment. Now, it's a huge undertaking for companies to integrate all those back-end systems, make them talk to each other, but the reward is vastly improved customer satisfaction and, hopefully, loyalty.
Makes sense. And finally, the rise of
remote and hybrid work models. That seems to be really reshaping the workforce within these centers, especially fueled by the last few years.
Absolutely. Post-pandemic, many call centers have embraced these flexible staffing models. They're allowing agents to work from home or maybe come into the office, sometimes a hybrid environment. The advantages are pretty clear. Companies can access much wider, expanded talent pools. They're no longer limited by geographic location. And of course, they can significantly reduce overhead costs for things like office space.
But there must be downsides, too.
Oh, for sure. This shift also introduces new complexities, particularly in sophisticated workforce management. How do you schedule and monitor a distributed team effectively? Performance tracking becomes different. And of course, cybersecurity is a big one when people are working from home networks. These are all challenges that require really careful navigation. It's definitely a trade-off that companies are actively managing right now. If we connect all this back to the bigger picture, these trends, AI, omnichannel, remote work, they underscore a massive, really systemic shift. It's not just about fielding calls anymore. It's becoming much more about engineering holistic, often proactive customer experiences that anticipate your needs and flow effortlessly across every single interaction point you might have with a company.
Wow. So we've really journeyed through the core drivers pushing the global call center services market forward. We've dissected the significant challenges it faces
Yeah.
and explored these really transformative trends shaping its future. It's clearly a dynamic sector, one that truly underpins so much of our daily interactions, often, like we said, without us even realizing the complexity involved.
Yeah, and as companies navigate this ongoing transformation, staying ahead of these trends and, importantly, proactively addressing the restraints we discussed, that will be absolutely crucial for their success, particularly in a world where, let's face it, customer expectations are higher than ever before. So, maybe a final thought for you, the listener. Next time you interact with customer support, whether it's by voice, chat, email, whatever, maybe pause for just a moment. Consider how these shifts we've talked about might be influencing your own experience and what that implies for the future of customer relationships and indeed for the businesses you choose to interact with.